Hey guys, welcome to my new video. I've been away for a while, but now I'm back. And in this video, I'm going to focus on Fibonacci and H and Y fractals. A lot of people have been asking because they're not quite clear of how to draw, Fibonacci targets and how to measure those fractals. So I decided I'm going to shoot a video about it. A few things to mention before I get into this. I have a guest coming on my show. His name is Jan. He wrote a book, Inventing Bitcoin. That's going to be very interesting talk because he wrote that book in a very elegant way and easy to understand for any person. So that's going to be very interesting if you're interested to understand how Bitcoin works and not necessarily knowing the technical side, but still understanding how it works. I highly recommend to join us on that talk. I almost have all the equipment necessary for the offline satellite-based Bitcoin transaction. So that should I hope I'll shoot that video this weekend. So that's coming as well. I visited Ugly Old Goat on his Saturday night Bitcoin show. If you're interested, you can watch that. Tone Base was there, Nick was there. We talked about Bitcoin banking, Bitcoin personal banking, user experience, security, and all these kind of interesting topics. I started talking like sort of halfway the video, but I highly recommend watching this video as well. Okay, so let's get into Fibonacci. First of all, what I want to say about that is, what's the point? Why do we want, and what's the point of understanding fractals, and what's the point of having, going about drawing these Fibonacci targets and so on, so on. So what this type of trading can bring? First of all, is my job as somebody who's teaching you how to trade is, first of all, to make sure that if you lose a little, right? That's like it's I would do a good job if I make sure that if you do lose, you lose a little. I mean, it's much better to lose 2%, 3 or 4 times than losing, 50% or the entire thing if you don't execute it correctly. And with this system, I call it kind of Anti-Rekt system. It provides a very nice and tight intervals for your entries and the stop losses. So basically, you enter that zone, you have your entry that zone. If it crosses that zone, it stops you out, but everything's fine. You just maybe just 1% stop loss, right? And then you look for something else. This way you may have 50% success rate, but then you may have something like that, like what I just had. I had 5% plus, 10% plus, and then 1% loss and 2% loss, and then and then we'll see what's the next one. But that's the scenario. You take you have like a 1 or 2% loss. You may even have like 1% or 2% 3 times in a row, and then you have one big run. But you do play it, you do enter these things, and that's the whole secret behind it. And there's so many people out there that are telling you exactly what the price is going to be and predicting, but very few to saying what to do in each scenario. And I hope that this video will kind of help you to understand what happens, how do I trade if there's a breakout, how do I trade if it's a retracement, and so on, so on. All right, so let's get in. First of all, it may seem like it's complex, but it's not complex. But for me to really fully explain how it works, I won't be able to do it in 10-minute video. So I'm just going to briefly give you an overview. But as you understand, it's only so much I can show you. All right, H and Y fractals. If you're not familiar with those, go check it out. My video, H and Y fractals. And I'm going to show a few examples and few trades that I did and how I use fractals for this type of trading. Okay, so we have H and Y fractals, so we can pick anything. I mean, there's this everywhere, right? Look, there's H here, there's Y here, there's H here, and then there's certain pattern. They always behave in a very interesting way. For example, let's start with the first one. We have H, so we have on the 4 hour. We can go to 1 hour because it's a smaller fractal. It's a little slow. Okay, so yeah, we have H fractal, right? So when the price retraces like this, of course you don't want to enter at this point, right? This was a wick, but whether it's a wick or something else like this, you don't want to enter on the first run, right? What you do, you wait for the second one. And just like H's and Y's, sometimes they may end up being like H0. I call it H0 because it hit an exact area as it was before. I mean, the first leg is at the same level as the second. Therefore, I call it H0. This one, I would call it H2 because the second leg was, past the first one. Okay. And so yeah, they have a different character. Like if you look at this Y would be Y2 because the second is higher, and so on. So for example, let's look at this scenario. How will we measure this Y, right? So we have this let's say this Y stock going up, and now we have a proper retracement. And how we're going to play this Y? Well, first of all, from the Y perspective, if it's forming Y2, then it's going to surpass the first one by a certain degree. It doesn't always work, but it works a lot of the time. So what we do, we draw from the top to the lowest point of our retracement, and then we'll look for 1272. That's our ultimate target. Now, in this case, it didn't quite hit that target, so it's normal. But that was our ultimate target trading H. So when we have a second leg, and then you enter your trade, your H fractal trade, the way it works is that you kind of know now that you're trading H within Y with the ultimate target right here. But obviously your first target is 1272. You'll look for the retracement. See, there's so many variations. I would measure this one like this. Again, similar way as you measuring the Y fractal. You're taking the shorter leg, and then when you have the H belly, the top part of the belly. Okay, so you measure like this, and then what you see 272 retracement to 0.5. This happens a lot, and so sometimes the price just keeps going through to 272. If we flip it around, sometimes the price just keeps going straight through, and sometimes it retraces. So that's why you can use your trading in a such way that if you see if you see signs in a retracement, you may position some of the buys over here in case the price retraces. Then you have a continuation. Then obviously the price kind of slows down, but even with the smallest H, like if you measure this one, you'll still see similar scenarios. Okay, so in this case we're having 272, and then it moved to 1272, and then it continued all the way to 272. Okay, so this H fractal on 272 gave you your target. It met the target. So for example, let's look at other example. This was a small one, right? but let's look at another example. Let's look at 4 hour. Okay, let's look at the bigger one, right? This is the H fractal. Again, so this is our Y. When the price drops down like this, obviously you're looking, this was 1 hour H fractal, right? So this could be tradable as well. And obviously it moved up, probably hit 1272 and probably retraced to 0.5. Okay, that 1272 and retracement to 0.5 happens like 80% of the time. So, you know, you can kind of watch for that. Now, so we measure this, the lowest leg. That's, we're measuring the Y fractal now, and we're looking at 272, and this is our target, 5626. Okay, so this is what our Y fractal gave us. Now, of course, at this point, you don't know if it's going to form the H or not, but it almost always does. So now, when it did form an H, at this point, now we can measure the H fractal. And then we can see, what do we see here? We see, okay, let me just flip it around. We see 272 target right here. Just like Y fractal, it gave us about this area, and then this gives you this. So basically now you have you know, kind of, it's not quite close, but you have a confluence about this area, so you can orient yourself about this, you know, as this target. Now your stop loss may be the next fib, and this is how I use it. You know, if I see that Y fractal gives me one target and H fractal gives me somewhere in about similar area, and then I would use the second fib as my stop, you know, and then, like I said, it works. If it doesn't work, it's okay, because it's just like a very tight stop. And if it works, you catch the entire retracement. So you risk 1% and you may get 10% back. So you want to risk that every time. And what this gives you, it gives you those intervals, those areas where you could enter. It gives you this opportunity, gives you a chance. It's not precise, but it's precise enough within 1 to 2% range for you to take a chance to lose a little or gain a lot. So, as I always say. Okay, we can try the same thing on this one. By the way, I mean, this, I looked back in the previous bull market, bear market, like it acts similar way, right? The fractals act very similar way. So we use it, this one. Boom, look at this. 272 retracement. Again, you see, we had this didn't quite hit it, but that's why we use the vague type of trading, right? So we don't put one specific target. We put multiple on the way there, and then obviously if it crosses our stop, it just stops all these out, and then obviously it stops at whatever your average was there. So that's another strategy that I can't quite get in, you know, here, because it's gonna be too long. Video is gonna be too long. And as you can see, it takes a lot to really understand this, and I can't really give you a quick explanation and expect you to know how to trade after that. But here we are. We have another target, and then we can look for, well, let me not delete this one. Let's actually superimpose another. So we have the H, and we take the shorter leg. Top of the belly is kind of tight, but we're looking for 272, right? So the 272 is giving us 5585, and this, yeah, and then that was the next fractal. So if we are looking at 272, it's actually, let's flip it around, and I bet you it's probably going to be like 4272, right? So there, so we have 4272 agreeing with Y fractal 272, right? So now that's why you would pick this target, right? So the Y fractal agrees with your H fractal, and that's why you put fractal. Now in this case, it didn't have any retracement, just went straight up there. Before you would have a retracement, right? So it hits a specific target, retraces, and it hits the secret target, retraces. This didn't have anything; it just went straight for the target, you know. And entering these, you know, entering that is not difficult at all. I mean, when you have the first retracement, obviously you don't do anything. But when you have the second one, that's you may select to enter somewhere at the, you know, at the previous price, like for example in this one, right? So this was the lowest one, so you may start entering somewhere here, a little bit below here, and have a stop somewhere here, right? So then you enter your H somewhere over here. Yeah, and you almost always get a chance, by the way, you know. That's why there's no point chasing this one. Wait for the second leg, and then you can enter. You may enter by obviously trading like this and having your stops. If it breaks down, then you just stopped out and it's all okay. If it doesn't break down, you pick up this trade and you carry on all the way to your Y target and your H target. By the way, there's many variations of these, you know. Sometimes it goes to 618 and then retraces to 1, you know, and then so you gotta basically, as you'll see more and more of these fractals, you'll recognize them and you'll know how they behave. Okay, so let's look at the smaller time frame one. So I did a few trades here. So this is what I did here. So as you can see, the price just retraced, went back up, retraced, went back up again. So as it was going up, I would short here, and I would pick it up over here, and then I would short here again, and I would pick it up over here. It's a failed breakout, right? So you trade it as if it's a failed breakout. So for example, you measure, let's say this one. So yeah, that's your next target right here. Yeah, and I selected this I selected a stop at 5883, and I selected that stop based on you know, on the previous resistances and so on. So like if it just went further up than I expected, it's okay, like you lose one. But like, see, like have 1-2 trades that worked out, and the last one when I shorted over here didn't work out, right? So this one got stopped out, and but again, like what I did here, I shorted at 5927. Why would I short the short 5927, and then I put a stop at 60 20 60 40, but I shorted it at 5927. Why would I go and short 5927 at this point, right? It's kind of arbitrary. It's not quite arbitrary, because sorry, if I measure it like this, so it gave me 5839. That's how I picked up the first two times, 5839. That was my target, and And now let's see. And that's how I got my next target measuring like this. So this was my Y from top to here, and I got 5927, right? So 5926 in this case, but I got 5927. And this is my retracement trade. And then the next fib is 6027, so that's what was my stop. Okay, and then look what happened. It's exactly entered that area. It didn't pass that through, and now we're here. Okay, now we don't know what's going to happen, right? But I'm kind of in the short trade. If it retraces, I have multiple targets. I have one target over here. I have one target over here, and if it in case it completely, you know, retraces, I have one here, and I think and one here, right? So if we have a strong retracement, I'm gonna be collecting all the way. Now if we don't, if we have like a small one, what I do, I just move to break even, and if we do collect everything, then that's great. And if we collect just like a couple, when I get back, I just break even. Okay, so there's nothing to lose for me. If I enter a trade and it retraces, if I have one retracement, hits the first target, I move to break even, and then if it keeps going down, it will just hit my targets, and if it doesn't go down, it goes back up at break even. So there's no loss, right? So you lose. So in this one, if I'm wrong, I can kind of break even or maybe win a little bit. But if I am, you know, right, and if it's a significant retracement, you know, there's a lot, there's a lot of reward there. And if I'm wrong, like it was in this case, where was I? Yeah, so I shorted this again, 5837. I shorted that one again, and in this case, obviously, it stopped out. It went through 5883. It stopped me out. And what if you can do the math, what was it like? It's less than 1% loss. Okay, so I mean, it's nothing. It's absolutely nothing. And that's what exactly what it gives you. It gives you these targets, these intervals that are not exactly precise, but they're precise enough for you to enter and get out if it doesn't work out, right? And then, like I said, if you have like a 50% chance of having, you know, 1% loss every time you play, but if you're right, like, you know, 5% plus or 10% plus, it's worth taking that every time. I hope it makes sense. And yeah, that's my plan. And obviously, what happens if we do break out? Because this seems like a failed breakout. I mean, it can retrace and then continue. My plan, if it hits through, you know, where I have my stop was 60-20, 60-40, then I changed my game a little bit, and then I'm looking for perhaps entering along again with the targeted stop, and then I you know, look for another target. But anyway, it's just kind of beyond the scope of this video now, but hopefully it makes sense. Just to recap again, so there's different fractals. You have H0 fractals, you have H1, H and H2, and then you have you know, Y0, Y1 and Y2, and essentially that's how you trade. You don't know, again, you don't always get it, but when you don't, it's such a small loss that it's just, you know, it's peanuts. It's interesting to play you know, like this, and that's why I think it's very this type of trading is advisable for the beginners, where you have pretty much it would be very difficult to lose a lot, because the rule of the game is that, like, you gotta have your tight stop losses, and if you wrong, it's fine, boom, you lost a little bit. But look, if you're right, like, I don't know, you know, what's gonna happen after this, but I have my targets, and I can afford that 1% loss if I'm wrong, but I you know, but if I'm right, I have you know, who knows, we'll see. But I'm happy either way, and that's the important part. Like, there's no fear, there's no pain, there's nothing in it. It's just a game. All right. So we have 25 minutes in now. It's been a little bit longer than expected, but hopefully that makes sense. You know, sometimes, like I said, sometimes they have these retracements. They go up, go down. You know, and sometimes, like in this case, it didn't have a significant retracement, but then it had a massive one. But they hit a Y fractal target, and then H fractal for 272 target, which was like a confluence. That was a good opportunity to trade. So yeah, so hopefully that helps a little bit. All right, guys, I'll see you in the next one. Take care and trade wisely. Take care. Bye.